$6.3 billion moved on-chain this week as Bitcoin whales orchestrated a subtle but significant shift in positioning. And if you're paying attention to where the smart money is going, this week's data tells a story that most traders are completely missing. Bitcoin started the week at $65,099 and closed Friday at $64,328, a drop of just over 1%. But that surface level decline masks what was actually happening beneath the surface with institutional and whale level positioning. The week played out in a deep fear regime, with the Fear and Greed index averaging 28.8, which is the kind of environment where real conviction moves happen because the noise gets drowned out and only serious money acts. The dominant theme all week was repositioning, not panic selling. Yes, price went down slightly, but the way whales moved their coins told a completely different story than what the chart alone would suggest. Monday started with a huge move, $8.1 billion coming out of exchanges in a single transaction, the biggest single move of the week, which immediately signaled that someone very large was taking chips off the table. Bitcoin closed up that day, despite the exodus, gaining 0.94% as whales netted 6.7 thousand coins out of exchanges overall. Tuesday saw a rally, Bitcoin jumping 1.7% on lighter activity, which honestly felt like a relief bounce after Monday's volatility, and whales continued the outflow pattern, moving another 1,568 Bitcoin away from exchange wallets. Wednesday was the turning point in the week's narrative. Bitcoin slipped to 65,920, but here's where it got interesting. Whales shifted into distribution mode, but early accumulation patterns were already starting to emerge in the data, which is the kind of divergence that precedes major moves. Thursday got messy. Bitcoin fell 1.7% as whale net flow finally turned negative, and crucially, 276 large holders flipped into distribution, which felt like the beginning of a capitulation phase. Friday looked like confirmation of weakness, Bitcoin falling another 1.45% amid that fear regime I mentioned. But here's the curveball. Whales drove 137,830 Bitcoin in volume, the highest activity level of the week, which in a down market typically means accumulation is happening at lower prices. Saturday, the picture cleared up. Bitcoin edged higher and whale accumulation accelerated, with the fear index still pinned at 27, which told me the smart money was done selling and starting to reload. The week's biggest pattern is this. 4,546 Bitcoin flowed out of exchanges net, which is a major withdrawal signal, and it happened across 653 separate mega whale transactions of 1,000 Bitcoin or larger. That's not noise, that's conviction repositioning. The divergence between price action and whale movement, combined with that capitulation moment on Thursday, looks like the bottom of a corrective dip to me, not the beginning of a larger downtrend. Watch Monday through Wednesday next week for confirmation. Daily briefs go live every day at 9 p.m. UTC on SwissWhaleIntelligence.com. Subscribe and turn on notifications so you don't miss tomorrow's update.